Today we're going to do a little update on Asana. Currently selling at a $3.6 billion valuation, selling for around $16.40 right now. This video will pretty much be about their Q4 2024 earnings that they just posted and why you should ignore the noise even though the stock has dropped about 15% since they posted these earnings. Okay, so we're going to talk about some of the updates that they just posted for the Q4 2024 earnings call. We'll take a look at the latest numbers they just posted and why you should just ignore the stock drop that is happening right now. So if we take a look at the stock price, ever since they posted that earnings yesterday, the stock's been down around 17%. They did post some positive news, but the stock is acting negatively. So pretty much the stock's been hovering around this same range for the past year. This is pretty much the lowest it's been since March of 2023. So is this a good time to get in? Let's go ahead and check out the numbers. All right, let's start. So here's some of the quarterly data. Here are some of the data points we're going to be looking at: earnings per share, total revenue, cash flow per share, and operations, net income, EBITDA. So these are just some of the numbers that they talk about in the latest earnings transcript that they just released. I went ahead and input it into this last row. So we're going to take a look at this last row right here. This is the latest reported earnings. This is going to show how the company is doing recently, this previous quarter compared to last year. So total revenue, they posted 171 million. That is up 14% year over year. Last January, they reported 150. So up 14% year over year. And the earnings per share, they posted negative 0.28. That is 36% better than the previous year. Both pretty good improvements on earnings per share and total revenue. Current quarterly earnings per share should be up a major percentage, around 25 to 50%. All right, let's go ahead and go down to cash flow, see how their cash flows are doing. They do aim to have positive cash flow this year, 2024. And if you just follow the trend for the cash flow per share and cash flow from operations, you could see that there is a trend to positive cash flow. So let's take a look at cash flow from operations. They posted negative 15 million in January. That is up 50% year over year. The previous quarter before that, negative 8.2. That is up 80% year over year. So huge improvements in the past 2 quarters. When we take a look at cash flow per share, also huge improvements the past couple quarters. The most recent one, they're up 50% year over year, and 80% the previous quarter before that. So as you could see from, so if we take a look at all the data points from 2023, pretty much been improving their cash flow all of 2023. They weren't really improving much in 2022, but 2023 was a good turnaround for this company. And you could see that they are posting huge improvements, 60%, 130% growth year over year. So just to mention, guys, in July of 2023, this was their first positive cash flow per share that they posted as a public company. And that is up 131% year over year. The previous year in 2022, they posted negative 22. So you could see that there is a trend towards positive cash flow. So when we go all the way down to net income and EBITDA, they posted negative 62 million in net income. That is up 34% year over year. They posted negative 95 previous quarter before that. So once again, there is a trend to positive net income also. So lastly, we're going to go ahead and check out EBITDA. As you could see, 27% year over year. They posted negative 87 quarter before that, so 27% year over year. And just a couple highlights, guys, in the earnings call. They talk about how their fiscal revenue grew 19% year over year. They've added 2,200 core customers during the year, and 100 customers spending 100,000 or more on an annualized basis. They also talk about how they are moving towards positive free cash flow for 2024, and they expect to make that this year. As you can see, pretty much everything in the green on this chart is going to show positive growth year over year. You could see the trend heading towards positive. Yes, they are still making negative earnings. They are still negative cash flows in a lot of the quarters, but huge improvements from 2023, and they plan on making a lot more improvements 2024. To conclude this all, I would say ignore the noise, guys. I feel like this is a good company at a good valuation right now. Again, buying it at $16.40, you're pretty much buying it the same price that it was around May of 2023. So I just wanted to make this little video to talk about the latest earnings transcript. They talked about they're making a commitment that they will become positive free cash flow by the end of the coming year this year. So anyways, guys, I think it's a good time to buy this stock at around this price before they hit those positive earnings. And this is just my opinions. Let me know what you guys think about Asana. Write in the comments, give me a like, thumbs up, follow me. Thanks for watching, guys. We'll see you on the next one.